S&P up a measly 0.02% for the week. But before we get into the details of the price action of the S&P 500, let's cover momentum real quick. Momentum is still positive on the S&P 500 when you measure the 12 months, the rolling 12 months versus the S&P 500, versus Treasuries and the MSC All World ex-USA Index. So that is good, that is still bullish for the longer term. Second thing is growth is still stronger than value on that same measurement, and when it comes to small and large caps are better than small caps according to momentum. So we are still in a risk-on stance when it comes to the longer term movement of the markets. But now let's look at the S&P 500 on a weekly time frame and get into a little bit of that and what we see coming. And here's a beautiful chart of the S&P 500. Each one of these candles or vertical bars represents 1 week of trading. And so there's a lot going on here, but I want to point out a few things. Number one, last week's price action. So it was a weak inside bar, and what inside bars represent, they're neutral bars, so they can be buy signals for the bulls or they can be sell signals for the bears. We don't know which way it will pan out. However, we are right in the middle of a trading range, and we're still in the first leg of a pullback, and it's a 50% retracement. 50% retracement, that is a logical place to bounce higher. So we don't know if we will get that bounce, and we are still in the first leg of a pullback. So I would suspect that somewhere in here, we're going to start to see a retracement back up to the highs and at least some sort of trigger to buy. But don't know if we'll get it this week, coming into this week, but we'll be watching it really closely to see if the bulls can hold this 50% retracement level. When we look at the current positions in the portfolio in this week's operating plan, as far as our income play, we still like preferreds. Preferreds, we actually got a buy trigger last week, so that's bullish on that. Now, they are at the bottom of what they've been in a very, very long-term trading range, and so feel pretty good about that. The second thing is our momentum play, our 12-month momentum play. We like growth and we like large caps, and they're still right down there where they could be considered support level, logical support levels, either on a moving average or a channel line. So it looks pretty good there. When we look at the weekly swings, the ones that are a little bit shorter term in nature, but still we're looking at their weekly decisions are made on there. Then we've got transportation and technology. Those are both down at the very bottom of the trading range right there. So if those break support, then we're going to pull the plug, get out on those. Now, the other weekly swings, we look at aerospace and healthcare, and those are right at that 50% retracement level, and they look very similar to the S&P 500. So, we had a nice run in them and a pullback. We're right at that 50% level. So those still look bullish overall. And then finally, the US dollar position looks good. We're sitting right there. Looks like we're about to break out if we can just get some positive action there. And then, I did forget one more position, the commodities, natural gas position. Down a little bit for the week, but still well within that trading range and right in the about ballpark in the middle of that trading range. So we'll see if we can get some bullish price action there. No new buy signals or no new anything as far as what we're considering buying this week. We're going to hold on the current positions, see if we get a bounce here in the market. Frankly, I suspect that we're going to get a bounce and then possibly a second leg down. And so that's what I'm really going to be looking as far as aggressiveness for the buy signals. With that, have a great week, and we'll talk to you next time.